हेलो एवरीवन, कैसे हो आप सब। गाइस, आज हम स्टार्ट करने वाले हैं हमारा वीडियो नंबर 33। गाइस, लास्ट टाइम हमने बुक वैल्यू और फेस वैल्यू को डिस्कस किया था, राइट। और आज हम देखने वाले हैं मार्केट वैल्यू क्या होता है। दिस इज़ द मार्केट प्राइस ऑफ अ शेयर, सिंपल लेमन लैंग्वेज में। देखो गाइस, एशियन पेंट्स मैंने यहाँ पे सर्च किया, दिस इज़ द मार्केट प्राइस ऑफ एशियन पेंट्स। ओके, फिर सिमिलरली the market value of the entire equity of a company is termed as market capitalization and is computed as market price per share multiplied by total number of outstanding shares. तो बेसिकली मार्केट कैप का मतलब क्या होता है, अगर मुझे कोई कंपनी खरीदना है तो मुझे कितना पे करना पड़ेगा उस कंपनी को पूरा खरीदने के लिए, दैट इज कॉल्ड एज मार्केट कैप। ओके, मार्केट कैप कैसे निकलता है, करेंट मार्केट प्राइस मल्टीप्लाई बाय नंबर ऑफ आउटस्टैंडिंग शेयर्स। सिंपल, देखो यहाँ पे लिखा हुआ उन्होंने, is computed by market price per share multiplied by total number of outstanding shares. The market value of share depends upon host of factors like expected performance of the company, market sentiment and liquidity among other. So market price किस पे डिपेंड करता है, बहुत सारे फैक्टर्स पे डिपेंड करता है, जैसे कंपनी के परफॉर्मेंस कैसे होंगे, मार्केट के सेंटिमेंट क्या, लिक्विडिटी क्या है और अदर फैक्टर्स। रिप्लेसमेंट वैल्यू, ओके, ये थोड़ा नया है गाइस, ये आपने शायद ही सुना होगा। व्हाट इज रिप्लेसमेंट वैल्यू? This refers to the market value of all the assets of a company at any point of time. This refers to the market value of all the asset of a company at any point of time. If a new company were to set up with all the infrastructure plants which an already which an already existing company has, then the cost which it would be bear today is known as the replacement value of the existing firm. एक बार वापस पढ़ते हैं। Replacement value refers to the market value of all the asset of a company at any point of time. If a new company were to set up with all its infrastructure plant which have already existed company has, then the cost which it would be bear today is known as the replacement value of the existing firm. चलो एक बार ये देख लेते हैं चैट जीपीटी करके। कॉपी से आए, यहाँ पर हम पेस्ट किया। एक्सप्लेन इन लेमन लैंग्वेज। चलिए, replacement value refers to the cost it would take to replace a company's asset. Replacement value refers to the cost it would take to replace a company's asset like building, equipment or machinery. Okay. With new one based on current market price. Imagine if a company has a factory with old machinery and a new company want to set up the same factory with similar equipment. The replacement value is the amount of money the new company would need to spend today to buy the exact same infrastructure and equipment given today price rather than what the company paid years ago. For example, if an existing company build if an existing company built a factory 10 years ago if an existing company built a factory 10 years ago for 100 crores, but the cost to build a similar factory today has been raised to 150 crores due to inflation and higher cost, then replacement value of the factory is 150 crores. In simple terms, it's looking how much it would cost to replace everything in a company owned with brand new version of the same thing in today's market. This is an important measure because it helps to understand true value of a company assets in real world terms rather than just what they originally paid for. This concept is used primarily in industries with significant physical infrastructure like manufacturing or energy sector where the cost of replacing assets can be substantial. Real real example with Indian companies. Let's take the example of Reliance Industries and Tata Steel, two large companies with significant infrastructure. Reliance Industries, oil refining and petrochemical plant. Reliance Industries operate large oil refining and petrochemical plant in Jamnagar, Gujarat, which are among the largest in the world. If Reliance were to rebuild these refineries today, the cost would likely be much higher than that it originally spent, right? Due to inflation, advancement in technology, and increase in the price of raw materials. For example, The company built the Jamnagar refinery in early 2000s at a cost of around 27,000 crore. However, if a new company were to establish the same refinery today, considering the rise cost of raw material, labor, and technology, the replacement value of the refinery could be significantly higher, potentially over 45,000 crores or more, depending on the current market condition. Let me give you one more example. Tata Steel, steel manufacturing plant. Tata Steel operates large steel manufacturing plant, particularly in Jamshedpur, Jharkhand. This plant built decade ago are now some of the most advanced steel manufacturing plant in India. However, the replacement value be much higher today if a new company wanted to build similar facility with the latest technology and current market prices for raw materials and labor. For example, Tata Steel built its Jamshedpur plant in the 1950s, and the cost back then were much lower. Today, the cost to build a similar facility would like run into several billion dollars. Considering factors like energy cost, labor rates, land prices, and newer environmental regulation, this updated cost reflect the replacement value of the plant in today's market. Why it's important? The replacement value give a better sense of how much it would cost to replicate a company's existing asset today. This is useful for investors who want to know if the company's stock price reflect the true market value of its assets. It also helps in scenarios like merger, acquisition, or valuation of companies where understanding the cost to replace a company infrastructure can lead to a more accurate assumptions. This example reflect the tangible infrastructure based sectors like oil refining, stock replacement values a critical factor for seeing value and investment decision. अगर इसको और सिंपल लैंग्वेज में समझते हैं, more simplified. So the replacement value refers to how much it would cost to rebuild a company's asset when current prices, considering things like inflation, updated technology, and market condition. It helps investors see if a company's stock price is truly reflecting the value of its assets today, rather than original cost of those assets when they were purchased. For example, if a company built a factory 10 years ago for 50 crores, the replacement value might be 80 crores today because of inflation, rising value, raw materials, cost and labor expenses. इमेजिन करो यार, ये 10 साल पहले किसी ने कंपनी बनाई 50 करोड़ लगे, आज के टाइम पे सेम वैसी कंपनी बनाना है तो, और उसके अंदर वही सब इंफ्रास्ट्रक्चर चाहिए, वही सारे मशीन चाहिए, आज के टाइम पे उसको 80 करोड़ देना होगा, राइट? तो इससे क्या होगा, और ये ऐसा बढ़ा क्यों? ये बढ़ा बिकॉज ऑफ इन्फ्लेशन, रॉ मटेरियल्स के प्राइसेस बढ़ गए, राइट? रॉ फिर लेबर के एक्सपेंसेस बढ़े. दिस वैल्यू इज फॉर इन्वेस्टर्स or analysts who want to access if the company's stock price is too high or too low based on current cost of building the same business today. Actually, it also helps in mergers and acquisition. If one company is looking to buy another, knowing replacement value gives a clear picture of the trade value of the target company asset, especially if those assets are critical for the company's operation. It's a key metric in accurately evaluating and comparison comprising companies in sectors with large investment in infrastructure and physical asset. तो गाइस ये था रिप्लेसमेंट वैल्यू. रिप्लेसमेंट वैल्यू का सिंपल मतलब ये है, जो प्लांट बना हुआ है उसके जैसे एक और प्लांट बनाना है तो आज के टाइम पे उससे क्या वैल्यू निकल करके आएगी, दैट इज़ कॉल्ड रिप्लेसमेंट वैल्यू. और ये क्यों यूज़ होता है? रिप्लेसमेंट वैल्यू इसलिए यूज़ होता है बिकॉज अगर मुझे कोई कंपनी को ख़रीदना है, ठीक है, तो उसका सपोज कोई एक कंपनी है, ठीक है, जो कि ऑलरेडी बनी बनाई है, सब कुछ है, तो मैं उसको ख़रीदूँगा तो क्या कॉस्ट आएगा, या अगर मैं सेम का वैसी कंपनी वापस लगा रहा हूँ तो क्या कॉस्ट आएगा, राइट? तो वो सब अंडरस्टैंड करने के लिए भी इस चीज़ को हम बहुत ही, इस चीज़ का भी बहुत यूज़ होता है. इसको कॉल्ड है रिप्लेसमेंट वैल्यू. अब आएगा इंट्रिंसिक वैल्यू. इंट्रिंसिक वैल्यू क्या होता है गाइस? इंट्रिंसिक वैल्यू ऑफ एन एसेट इज द प्रेजेंट वैल्यू of expected free cash flow from the asset. Warren Buffett defines the intrinsic value as it is the discounted value of cash that can be taken out of a business during its remaining life. In simple terms, the intrinsic value of an equity share is the discounted value of its future benefit to the investor. Investing in equity is about estimating this intrinsic value and paying a price today to earn the future value. चलो देखते हैं. कॉपी किए, यहाँ पे गए, इसको यहाँ पे पेस्ट किए. चलिए लेट्स सी. चलिए, intrinsic value is the true value of an asset. ठीक है, intrinsic value is the true value of an asset like a company's stock based on the future cash flows it is expected to generate. It reflects the amount of money that an investor could expect to receive from the asset, discounted to its present value, today's value. This is important because when buying a stock, you are essentially paying for the future benefit, that is profits and dividend, etc., that the company is expected to provide. Simplified explanation. Let's break it down using an example with an Indian large scale company like Reliance Industries. Expected free cash flow. Imagine Reliance is expected to generate 10,000 crores per year in free cash flow, profit after expenses and taxes. For the next 10 years, the future cash flow are the benefits you can expect as a shareholders. Discounted the present value. The value of the 10,000 crores per year is worth less today because money today is more valuable than money in future. For example, one rupee one today can be invested and earn more over time. So to find the intrinsic value, we apply a discount rate, usually based on expected return rate or market interest rate of this future cash flow to bring them to today's value. Final intrinsic value. After applying the discount rate, you might find the intrinsic value of Reliance share based on future cash flow is around 1,200 per share. Why this matter? If the market price of Reliance share is lower than 1,200, the stock might be considered undervalued and it could be good investment opportunity. If it is higher than 1,200, the stock might be overvalued. Investor like Warren Buffett emphasizing calculating intrinsic value to ensure that they buy stocks at a reasonable price compared to what the future cash flow justify. Let's take an example. Let's take HDFC Bank, another large cap company. Suppose it's expected to generate 5,000 crore in free cash flow each year for next 8 years. By discounting this future cash flow, taking into account the time value of money, you could estimate the intrinsic value of its share. If based on your calculation, the intrinsic value per share is 2,000, but the current market price is 1,800, this would suggest HDFC Bank stock is undervalued and could be a good buy. In simple terms, intrinsic value is a true worth of a stock based on money it will generate in the future. Investor aim to buy stock at a price lower than intrinsic value to maximize potential return. So guys, आज हमने इस वीडियो में चार चीज़ें कवर अप कर ली हैं. ये बुक वैल्यू मार्केट वैल्यू तो पहले हुआ था, सॉरी फेस वैल्यू बुक वैल्यू पहले हुआ था. आज हमने जाना मार्केट वैल्यू, रिप्लेसमेंट वैल्यू और इंट्रिंसिक वैल्यू. Which we doubt is guys, let us know in the comment box. Thank you so much for your precious time. Bye bye.